So Bitcoin, the way we see the chart right now, like Kevin explained it, it's looking a lot like the NASDAQ chart starting to roll over, or NASDAQ priced in gold. Yeah, well, Bitcoin at that's again the beauty of technical analysis is we don't have to worry about fundamentals, about whoever's spinning a positive spin, like is Bitcoin the next world currency? Like it totally doesn't matter. We saw that it was important. It broke down from a rising trend line, which is the first means momentum break. So when you break down from a rising trend line, momentum breaks, but often it tricks people because after that, there's like a Neko move back up. And then people, we're in the clear, but it refuses to do a new high. And then it tumbles down, breaks below horizontal support. And like Kevin identified on the chart, once you're below that, you have to favor more move down until the chart proves to you otherwise, that it can close back above those levels. And until it does that, the bias has to be downwards.
Okay, but I'm curious to how exactly you reached $20,000. Patrick, maybe you could elaborate on the target there, or how you arrived at the target.
That was just in TA. So we knew as fast as it went up, not a lot of buyers. So there was a vacuum. When it broke out above $18,000 or $19,000, it went up fast. It created a base on top around 40, 60,000, 30,000. And once you break down below that, there's not that many buyers that bought on the way up. So it just vacuums all the way down back to the previous base. And that's what we call a reverse symmetry move. So that's one of our techniques that we could use in TA, that we know, okay, there's vacuum, it's going to go all the way down. And then when there's that huge base where people previously believed there was a low watermark for Bitcoin, it hits it again. And then after that, it starts bouncing around that area until the market decides if it wants to try to go down below those levels or try to bounce back up.
All right, Kevin, let's get on to the outlook part. So do you have an outlook or an update to your Bitcoin call? I mean, again, we've reached your target of $20,000. I think the question is whether or not this is the bottom that we've seen.
Yeah, so the Bitcoin simple summary chart that I put out back on May 9th or around May the 9th, as you say, took us down to around about 20,000. I had a series of staged targets, 30,000, 20,000, and then an ultimate target that took us to somewhere around 10 or 12,000, David. Looking at the Bitcoin chart now today, we find ourselves in an inverted arc. So this is the opposite of a cup pattern. It's a sort of a dome-shaped pattern. And we have been rising, as Patrick just described, in a bit of a bounce off that 20,000 area. And it's taken us up and formed a bearish rising wedge hitting resistance. There are a number of technical analysis techniques and features of this chart which make it more probable that this is going to break to the downside and head down towards that 10 to 12,000 target. I would assess the odds at around about 70 to 80% likely that we break down to 20 to 30%. Excuse me, around about 20 to 30% probability of moving to the upside. So we can't rule out that upside move, but knowing where the support and resistance levels are is going to give us that really early heads up. So those are all marked on the chart for people to see.
All right, so Kevin, I'll let you elaborate on the price targets that these charts indicate based on the arc patterns.
Yeah, sure. So we're heading in the direction of the 30-week or 200-day moving average. Those are both very similar in value, of course. And that's somewhere just above $30,000, $32,000, $33,000, that kind of area. By the time we move up to meet it, I guess we could be somewhere around $29,000 or $30,000. So that is the upside target, and that's the highest I would expect it to get. We may well start to run out of momentum before then and begin to roll over. I noticed quite a few of the cryptocurrencies already doing that and seem to have put in their highs for this, what I'm seeing as a bear market rally. So we're either at or very close to those peaks at the moment.
Yeah, Patrick, I'm seeing a lot of hopium headlines, if you want to call that, on the internet. Mike Novogratz, CEO of Galaxy, saying Bitcoin will eventually one day reach $500,000. You've got people like Anthony Scaramucci saying that if it goes to $300,000, why does it matter if you buy at $20,000 or $60,000? So basically, a lot of large institutional investors are still very much bullish long-term. Do your charts give you long-term projections, or, like Kevin said, $31,000 is the medium-term price target? Can you look beyond that? Is that a technique that can be applied?
Yeah. Well, there's two things you got to remember about Bitcoin. It started, I think we talked about in our previous interview, it started in 2011. That's the charts. So it started at the inception of the NASDAQ, the tech bubble, right, market. And right now it's tracking that. And you got to remember right now, if we go in an inflation period where they're just devaluing fiat and we're just adding zeros, right? Because everything, let's say in the 1970s, a barrel of oil was $3, and then after that it was 20, and then 90, and then whatever it goes up. You have to start measuring stuff in adjusted for gold, adjusted for silver, adjusted for something other than fiat, right? Because nominally, let's say we're going to hyperinflation, Bitcoin targets, of course, if they could nominally stay afloat, even go higher. But then after that, if gold goes up higher or faster than Bitcoin, do you really want to hold like Bitcoin or any assets, that are just adding zeros to it?
Okay.
So like, we saw the SPX broke down versus the producer price index, or the Dow Jones Industrial Average break down versus the producer price index. And every time that's happened previously in the past, there's a whole bunch of other events that came from that. Then after that, gold broke out versus SPX. And after that, if gold breaks out versus SPX, silver tracks that ratio chart to practical perfection, miners, all that type of stuff starts going up. Once the capital flows, they start shifting away. So Bitcoin, the way we see the chart right now, like Kevin explained it, it's looking a lot like the NASDAQ chart starting to roll over, or NASDAQ priced in gold. So it's nominally, it's very hard to see higher targets for Bitcoin, very hard.
All right, continue on the thought of the NASDAQ being correlated with Bitcoin. So you're anticipating Bitcoin to go to $31,000. That's not a huge increase from where it currently is. Can you apply the exact same percentage gains to your NASDAQ analysis, for example, given how correlated the NASDAQ and Bitcoin have been together? I'll let anyone take that question.
In broad terms, yeah. I mean, until proven otherwise, cryptocurrencies and Bitcoin are a play on tech stocks, and that's maybe partly due to the fact that cryptocurrencies haven't been around for a huge amount of time. So we just don't know how they're going to behave if and when the stock market's going to a much more prolonged and serious decline, rather than just the usual short corrective phase that we've seen over recent years. So if we have a repeat of the sort of thing that happened in the 1970s, and we see downward to sideways trending stock markets for a number of years, we just don't know how cryptocurrencies are going to behave in that kind of environment. So this is where the technical analysis comes into its own, because you don't need to worry about what the narratives are, what the fundamental stories are, all the arguments that are going on Twitter and YouTube and all that kind of stuff. The technical analysis will tell you, it'll tell you straight away if Bitcoin and cryptocurrencies are doing what they normally do and what they usually do. And by the way, that would mean them finding a low point sometime during the final quarter of this year or the first quarter of next year. That would be very normal. And then for cryptocurrencies to go onto a new leg, new bull run to new all-time highs, that would be the normal. If that starts to look as though it's not happening, and if NASDAQ continues to show weakness, and by the way, the stock markets are also in a bearish rising wedge at the moment, then it means that as far as evidence is concerned, the cryptos are just doing exactly what the NASDAQ and the stock markets are doing, and they're not capable of decoupling from the markets. But gold and silver, of course, would be expected, and commodities as well. And for a whole host of other reasons, by the way, ratio charts and a whole host of other evidential analysis that we're doing, showing this capital shift, this flow of capital, and this share of capital that commodities and precious metals are getting, the share of the money supply is gradually shifting away from stock markets and away from general equities and towards commodities of various descriptions at the moment. Energy, commodities, precious metals, base metals, they're all taking their turn in the spotlight and handing the baton from one to the other. But that's where the growth is at the moment, if you want to put it that way, in the share of money supply, whereas the stock market is having it kind of seeping away at the moment. So right at the critical moment right now, as we're pushing up against resistance levels, both in crypto and in the stock markets. So it'll be sometime in the next 2, 3, 4 weeks where it'll be much more definitive answer as to whether we are breaking down or breaking to the upside. So the TA gives us the head start there. And by the way, as Patrick said, very, very important not to just measure things nominally. When you've got inflation at 9 or 10%, here in the UK heading towards 13%, we're told, don't just measure the nominal value of stuff. Fiat is, you can't just measure stuff in fiat. It doesn't make sense. You need to measure stuff with reference to inflation or with reference to gold. Otherwise, you're just referencing a paper currency that is losing value at